Because the easiest way to get paid trading and investing is by shorting a position if you're buying the stock straight up, or taking a put option if you're taking an option on the position. Okay? Now listen to me closely. These strategies, what they do is they make you money on a particular position as a result of the underlying stock or the associative option moving to the downside. Now let me go a step further. What we're doing is we're taking positions that will rise when the underlying stock falls. That's right. When the stock loses money, these positions rise and make us money. So if you're shorting a stock on a straight up stock buy, you actually want the underlying stock to fall in value, therefore making your short position rise in value. If you are taking a put option on a stock, you actually want the underlying stock to fall in value, therefore catapulting your put option upward, and you get paid because the underlying stock went to the downside. So, you hear us say often, bull, bear, we don't care. We can make money off of a position when it actually falls, just like we can make money off of a position when it rises. So now, let's go ahead and let's take a look at multiple positions. Okay, I'm going to give you well over 5. I think I'll go ahead and give you 10. I got 10 positions I'm going to give you that will make you money when the underlying stock falls. So strategically place stop losses on the positions, or strategically place shorting of the position if you're doing a straight up stock buy, or the cheapest way to get paid from a falling stock is to take a put option on it and get P.A.I.D. Okay? Now, the debate over whether the June tech correction is a sign that the markets have nowhere to go but down for the remainder of 2017 wages on as I speak. And as I'm talking right now, all 3 major U.S. indexes are in negative territory. Okay, got that Dow down 63 points, S&P 500 down 0.63%, and the NASDAQ down 1.44%. Okay? And what analysts are saying is that they continue, okay, to see positive activity in the markets. Okay? However, they are noticing that large institutional investors and the uber wealthy, they are becoming more and more liquid. They're moving more and more to cash positions and holding those positions. Okay? Now, not everybody is convinced, like the uber wealthy and the hedge fund managers, that the S&P 500 and the Dow and the NASDAQ is going to keep rising and going up. Many analysts are saying that they are seeing a pending top in the market. Now, at this time, we need to remember that good times, they always come to an end. And these good times in the markets, their end is in sight. Okay? Now, tech stocks got a wake-up call. Grocery stores really got a wake-up call. And now, the following positions that I'm about to give you could also face some pain in the second half of 2017. First position I want to give you is Ferrari, which trades, I'm talking about the car. That's right, Ferrari. Whether or not you know it, they're publicly traded. And they trade under the symbol RACE, race. RACE. Now, Ferrari has been a public company for the last 2 years, whether or not you knew it. And in that time, its stock increased in value by 71.4% from its IPO price of $52 a share. And that was through June the 21st of this year. And most of those gains came this year, up by 53.8% year to date. Now, when Ferrari went public, the excitement was almost palpable. Investors wanted a piece of the luxury car maker best known for its Formula One team. I mean, who wouldn't? This thing, I'm talking about their IPO, it oozed sex appeal. Okay? So, now it's had a strong run in 2017 and trades at 31 times its forward price earnings ratio. Okay? Those that know, they see this particular stock getting stuck in neutral. Okay? And wealthy people might buy Ferrari cars, but I doubt they want to own Ferrari stock at $100 per share. Ferrari has a lot of actualized profit, symbol RACE in it. Look for people to monetize their positions, and RACE moving to the downside. Next positions that you want to consider upon completion of the appropriate drill down for put options during the second half of 2017 is Herbalife. Herbalife, symbol HLF. Now, since Herbalife agreed to a $200 million settlement with the FTC last July, HLF stock is up 22.3%. Okay, now that's a good but not a great return given the company was seemingly left off the hook by Washington. But Herbalife is Bill Ackman's, as you know, biggest short. Now, when the settlement was announced last year, he was very forthright in his thoughts about the direct marketing business. Okay? So far, what Ackman expected to happen to Herbalife, which means the company was going to crash and burn, well, that hasn't exactly happened. But Herbalife's latest earnings report suggests that the company is already having a tough time succeeding under more stringent FTC regulations put in place as a result of the company's settlement agreement. So, Bill Ackman was wrong about Valiant Pharmaceuticals, and it cost him dearly. But I find it hard to believe that he's going to make a second mistake. Now, up 49.1% year to date through June 21st. Okay? Those that know, including some very, very well thought of analysts, they think the second half of 2017 is going to deliver bad news for those people who are long on Herbalife stock, symbol HLF. Next up, talking about positions that are prime put option candidates for the second half of 2017 is Wayfair. Wayfair, symbol W. Wayfair, symbol W. Now, when Wayfair went public back in October of 2014 at 29 cents per share, okay, many people were skeptical, okay, pertaining to this particular IPO. Now, up 112.6% year to date through June the 21st of this year, and 160% from its initial IPO. Those who bought into Wayfair from the beginning have done very well. However, before you continue celebrating, I'd like to revisit, okay, some reasons that were initially put out there as to why people should avoid Wayfair's IPO. Okay, first, many people argued back then that Wayfair was losing money. In fiscal year 2014, it had an operating loss of $148 million. And in 2016, that operating loss increased to $196 million. So from $148 million in 2014 to $196 million in 2016. The company continues to spend beyond its means to market its business. Okay? And as analysts said then, many of those same analysts are saying now, Wayfair, symbol W, is a losing proposition. Now, many people had and they continue to have a problem with its valuation, which at the time back then was 2.3 times sales. Still not making money, okay? Its P.E. ratio has decreased to 1.8. While this is good news, but now the company is trading at almost 100 times cash flow. So, this is just unconscionable. And when the market realizes, wait a minute, who's doing these evaluations? Who's doing these assessments? And how can Wayfair, symbol W, be trading at almost 100 times cash flow? Go figure. No. Those that know, going to go ahead and get out of this Wayfair, symbol W. Put option candidate. Second half of 2017 to get your P.A.I.D. Next company I want to give you is Apollo Global Management, symbol APO. Apollo Global Management. Now, there is no doubt that private equity as a whole is doing well in 2017. Companies like Apollo Global Management, well, they are doing well also. In fact, they're driving up the price that they're paying for companies they buy, leverage and resell those same companies for big profits. Okay? Now, Apollo is looking to close its latest buyout fund, estimated to be $20 billion or higher. Now, record war chests have buyout funds making a splash globally. But the market players remember how such funds indulged in large-scale deals over the 2005 and 2007 period, only to suffer massive losses during the global financial crisis that followed. Now, I'm not saying that this is going to happen in 2017, but with Apollo stock up 47% year to date through June 21st, okay, many analysts are betting, okay, that investors are going to take their profits in the second half of 2017 as they monetize their actualized profits. Once again, Apollo Global Management, symbol APO. Next company I want to give you is IAC Interactive. IAC Interactive trades under the symbol IAC. Now, a lot is going on at Barry Diller's media and internet conglomerate. On the upside, we have IAC Interactive Corp. And this company is merging into its home advisors business with Angie's List. Okay? And the two will form its own public company that will look to expand its control over consumer home improvement, reviews, and referrals. Okay? Now, the business is in a very good place right now as we speak. People are excited about getting a piece of Home Advisor. All right? Now, the newly combined publicly traded company to exist after the merger will be known as Angie, spelled A-N-G-I, Home Advisors. Okay? And the buzz is pushing Angie shares up before this new publicly traded company actually exists. Okay? Which in turn artificially boosts the price of IAC shares in the process. Okay? So as I speak to you now, IAC shares aren't worth the 105-ish price point where they're currently trading at now. Okay? Now, while Barry Diller's has created great value for IAC over the years, its stock is up 61.5% year to date through January the 21st of this month. And IAC is yet another example of a stock that the analysts see cooling off in the second half of 2017. Not necessarily because it's a bad stock, okay, but because the shares aren't worth the triple-digit price that they're bringing right now. Next company that will get you PAID during the second half of 2017 as a possible put option candidate is MSCI, traded under the symbol MSCI. Now, MSCI, well, they are the people behind many of the stock indexes that are used by exchange-traded funds or ETFs around the world, okay? And it is on a bit of a run in 2017, up 30% through June the 21st. Now, longtime shareholders of MSCI stock have done even better with 3-year and 5-year total returns of 32.8% and 26.7% respectively. Now, like the bull market, which is now in its 9th year, I might add, MSCI shareholders probably don't see the party ending anytime soon. However, everything has a past due date. And yours truly believes the next 6 months could be the beginning of its regression to the mean for MSCI. Now, MSCI has had 5 healthy years of returns. And as a result, okay, its price to share and price to earning ratios are higher than they've been over the past 5 years. And its earning yield sits at 2.9%. Okay? By comparison, Berkshire Hathaway has an earning yield that's almost double at 5.4%. Just wanted to throw that in. Now, MSCI puts out a lot of interesting data and analytics, but its phenomenal run, along with the markets as a whole, could be coming to an end in the second half, thus making MSCI a possible candidate for a put option upon completion of the appropriate drawdown. MSCI, trading under the symbol MSCI. The next company I want to give you is a company called JELD-WIN, spelled J-E-L-D, JELD-WIN, spelled W-E-N. Trades under the symbol J-E-L-D. Now, if you own a new home or recently installed new windows in your home, it's possible that you got a project from JELD-WIN Holdings, one of the world's largest manufacturer of both windows and doors. Now, JELD hit the New York Stock Exchange on January the 27th of this year, gaining 13.6% on its first day of trading and is up 51.7% through June the 21st of this year from its $23 IPO price. Now, because of these gains, okay, all right, when we look at these gains, some of these gains aren't unexpected given its price at the high end of its $21 to $23 range. Studies show that companies that price in this range average first day returns of about 11%. So it's right on target. But IPOs often come unglued after the lockup period has passed. And the pre-IPO investor can then exit their investments after the lockup period has passed. Now, in the case of JELD, the date is, write this down, July the 26th of 2017. July the 26th of 2017, the lockup period for JELD is over. Now, its private equity owner, 1X Corporation, reduced its stake from 83.8% before JELD's IPO to 63.4%, and again in a secondary offering on May the 26th to 44.9%. That's 44.9%. Now, why is one of the equity owners slowly selling out of the position? Now, 1X Corp, well, it still has 49 million shares to unload. However, and some or all of that could happen in the back half of 2017, a year that would surely put downward pressure on JELD stock. Next position I want to give you is one that we've made a lot of money on in the past. We're talking about Vail Resorts. Vail Resorts, symbol MTN. Now, Vail Resorts saw the competition for the hearts and dollars of skiers in North America heat up in April when the Aspen Skiing Club and KSL Capital teamed up to buy Intra-West Resort Holdings for $1.5 billion. Now, Intra-West sales brought deep pockets to the ski operators. Okay? And traditionally, in the past, ski operators have been on shaky financial ground for the better part of a decade, in which ski operators was forced to spin off any subsidiaries that they may have had. Okay? Now, the fight is on in the ski resort arena. And longtime shareholders of Vail Resorts, symbol MTN, might want to think about taking some profits off the table right now. Now, MTN stock is indeed up 31.1% year to date through June the 21st of this year. And the stock hasn't had a down year since 2011 and only 2 in negative territory over the past 11 years. Now, with its debt doubled as a result of buying another resort and a healthier competitor in the mix, the road ahead is going to get a lot bumpier for Vail Resorts, symbol MTN. And this next position is a position that is very, very cyclical. We're talking about H&R Block, symbol HRB. Now, back around 2010, H&R Block looked like it was all but dead. Turn out the lights, the party's over. But out to pasture, and people thought that the position and the company was going to be put out to pasture by online tax preparation services like TurboTax. However, since H&R Block stock fell to just below $11 in October of 2010, it managed to raise it to $30 a share, trading as high as $37 in late 2015. Up 36.4% year to date through June the 21st of this year. It's got to be one of the better comeback stories of the past decade. Now, a quick look at its fourth quarter earnings report doesn't flash any immediate sales signals, although revenues were flat at $3.4 billion for the 12-month period ending April the 30th of 2017. Operating income before taxes rose 10.5% over the last year to $629.3 million, while its operating margins were higher in fiscal 2017. They've been higher in previous years also. You see that the analysts, however, their biggest concern with H&R Block is that the company's revenues have set at $3 billion for the past 7 years. There's no increase. The only area that's growing regarding tax returns preparation is online, which is up 6.8% in 2017. But that accounts for less than 10% of the overall revenues of H&R Block. Eventually, investors are going to get sick and tired of the Groundhog Day-like business where cost cutting is the only way to deliver earnings growth, and they're going to start ditching H&R Block. You must see now what others see eventually. Do your appropriate trend analysis, and when you detect an EKG pattern or a trending to the downside with minimal volume, go ahead in, do your appropriate drill down, take your appropriate put option position, wait for volume to pick up in the days, weeks, months to come. Okay? As we roll through the second half of 2017, that increased volume then will go ahead and catapult your put option to the up position as the H&R Block underlying stock moves to the down position, and you get P.A.I.D. And the last position I want to give you is an ETF. Well, no, I'm going to go ahead and give you a macro position. Let me give you another micro. It's going to be a straight up stock position. It is Vertex Pharmaceuticals, symbol VRTX, Vertex Pharmaceuticals. Now, let me preference Vertex, which is a micro position, with this macro ETF position. I want to bring your attention to the iShares NASDAQ Biotechnology Index. iShares NASDAQ Biotechnology Index, symbol IBB. Now, IBB is up a rather mundane 19.2% year to date through June the 21st of this year. Down 21.4% in 2016, but up 7 consecutive years before that. IBB is an ETF that delivers 15.1% annually over the past decade. Okay? Now, having said that, and you can implement our ASK THE WIZ Wealth Institute holding strategy on this particular position as well. That's the macro play, but now I want to bring you to the micro play that we need to be considering for put options going into the second half of 2017. I want to bring your attention to Vertex Pharmaceuticals. Vertex Pharmaceuticals, symbol VRTX. Now, Vertex Pharmaceuticals is up 83% year to date through June of this year on the strength of a 3-month push that saw VRTX stocks jump 50.7%. Now, as a result of this fantastic year on the markets, it's managed 27.6% annually over the past 3 years, 4 times its pharmaceutical peers. Vertex, some of VRTX shareholders have to be very, very happy. However, in May, analysts begin to warn investors that the good news from Vertex cystic fibrosis drug was getting far too much traction for just one event. Now, that was back on May the 17th. Since then, it's up another 17.9% through June the 21st. You see, if it was vulnerable then, very little has changed in the month since to make it less vulnerable. Okay? So you, me, we, the ASK THE WIZ Wealth Institute family, we need to be very wary, okay, in the second half of 2017 as it relates to this particular position, because even good stocks, and Vertex for sure, have bad things happen to them every once in a while. And that every once in a while will indeed occur during the second half of 2017. Positions that will get you P.A.I.D. from put option candidates during the second half of 2017 upon completion of the appropriate drill down are as follows. Vertex Pharmaceuticals, symbol VRTX. Then we have that H&R Block, symbol HRBB. We also have that Vail Resort, symbol MTN. We have that Geld Wind, symbol JELD. We have that MSCI, symbol MSCI. We also have that IAC Interactive, symbol IAC. We have Apollo Global Management, symbol APO, and Wayfair, symbol W. And we started all off with, we also have that Herbalife, symbol HLF. And we started it all off with Ferrari, symbol RACE. Giving you information that will not only allow you to obtain, but also maintain your economic liberation. That's exactly what we do right here inside the Classroom Without Walls radio broadcast. Now, family members, look at each and every one of these positions. And then as they come up on their ER, their earnings report, okay, do the appropriate drill down and keep in mind the critical factors that I just gave you on each one of these positions. Do the appropriate drill down, confirm your put option if you're going to option out these positions, or you're straight up short if you're going to buy the position straight up, and then govern yourself accordingly to get P.A.I.D. The other thing you want to do as they come up on their ERs, look at the amount of actualized profit buying through the trend lines that showed that is locked up in these particular positions. Because the only way, not some way, the only way anybody can get P.A.I.D. trading and investing is they must sell the close. And when they sell the close to monetize that actualized profit, that's when you're going to see the stop move to the downside, the critical factors that I've just submitted to you kick in, pulling the position down further, catapulting your associative put option to the upside, and you get P.A.I.D. from the underlying stock moving to the downside.